Hi everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's video I'd like to have a look at how the US E-minis unfolded yesterday, which was Wednesday, December the 12th. In particular I'd like to have a look at the YM, because this follows on nicely from what I was talking about in my training webinar, or our training webinar yesterday, where I was talking about we only like to take trades that are ideal. In other words, they come together and fit in the larger degree trend really nicely indeed. So for this I'd like to start with the, I'll just clear that off, the 15-minute chart and show the kind of things I was doing in the webinar yesterday. For the larger degree trend, what I was talking about was looking at obvious pivots, and here you can see on the YM we had a couple of obvious pivots. The main one was this one back here. To place the DP, or the decision point resistance area, on this is really easy indeed. Hover the mouse over the top, right mouse click, do decision point, and it then places this on the chart for you. Now, one point to bear in mind is these are leading indicators. These are on the charts before the market even gets there, so they're leading indicators. So in reality, as the YM was rallying yesterday up here, this level would have been on your chart in advance. They're waiting for it. So as you can see, the YM went up and actually went up to this high here, and as you can see, that nailed the high of the day absolutely perfectly. Once that's in, the reverse then happens. The market starts to decline down. You now go back to the prior pivot, which is this one down here. Right mouse click, there's your initial target down there. So in reality, the decision point tool caught the high and the low of the day in the YM yesterday and projected that in advance, which is really quite good. So how could we have taken advantage of this? Well, if we go to the 3-minute chart, you can see that at these highs here we have two trade setups, a decision point sell, and this history triangle here, if I put the analysis on, was also a decision point sell. So I'll just clear those off. The STF is blue, but for the advanced traders among you, we already know that this was at 15-minute resistance, and in fact actually if I just change this to the 15-minute chart, quickly put that DP back on there it is. Now go back to the 3-minute chart, you can see this actually shows us even clearer what was happening. So this was the case here. You had this 15-minute decision point resistance on your chart. The market came up into this level, came down again, went up. It then made a automatic sell setup here. So if I put the analysis on, I'll just drag that across a bit so it's out of our way there. If we put the analysis on this bar here, this would be our first trade setup here. We had just got clipped in just by a tick, which is pretty unfortunate. And then it would have gone out and stopped you from -1R loss. If you'd been taking off this initial bar here, you wouldn't have been taken into the trade before the second setup came in. But let's take the worst case scenario, because it's always good to see the worst case scenario. So the worst case here is you'd have been just short by one tick there, stopped out literally a bar later. Now we use correct position sizing here. So this would have been, on this particular trade, we've been short 10 contracts to keep our initial risk small and under control. And that's the key to position sizing, is when you're wrong, you keep the losses small. So this would have been a -1R loss to start with. There was then another setup. Again, this was also at the 15-minute decision point resistance. This time the contracts came down to 7 because the bar was slightly wider, but this again kept our position sizing constant. In other words, the risk was still -1R or -1 risk unit. This then nailed the very high of the day. The market came down to this particular first target here. Now you could have then said, right, let's trade this like normal, standard trade management guidelines. So you look at the strength of the STF, which is at 1424. You come down to 1424, which was there, and the STF was just not quite strong. It was just what we call weak, in other words just below our strength band. So you could have come out with plus 2.6R. So even if you'd done that, plus 2.6R would have been greater than the -1R loss before, and you'd have made a profit overall for the day. However, because the market had only moved a small way, the more advanced traders among you would have had your larger degree targets on your chart already. So This is what I was talking about earlier in the webinar, is once this 15-minute DP was in at the high here, market started to decline, your next 15-minute support would have been off this low here, in other words, right the way down at this level here. So let's now go back to the 3-minute chart and see what that looks like. Well, as you can see, this 15-minute decision point target here was way below the market. So rather than coming out at this initial area here, you could have said, actually, I want to take this down to the next larger degree support zone, which is down here, and this would have increased your profit to near 7R. If you wanted to, you could have used your ATR stop to trail the stop as the market carried on down here. In reality, as the market hit this level here, you could have said, okay, thank you very much, 7R profit is very nice profit, I want to bank that and move away. Or you could have said the STF was strong, and that would actually held the trade into the close of the day for approximately 7.9 or nearly 8R. But let's take the worst case scenario again and say you came out with plus 7R profit. So either way, it was a very good result. And if we go back and have a look at, there's the session breaks on, so have a look at the day as a whole, this would have actually meant that using our 15-minute decision point targets, we'd have nailed the high of the day and also nailed the low of the day. And for the trading perspective, you'd have actually had a short trade from, well, the very bar of the high, and you'd have come down here and taken profit pretty much at the low of the day. So an absolutely fantastic result here, and shows you the power of these DPs, particularly as they're on the charts in advance, and shows you how you could have had a very nice trade there. Remember, there would have been a minus 1R loss up here to start with, but that minus 1R loss was kept small in comparison to the plus 7R profit, and that's the true power of position sizing. So a very good day for MTPredictor yesterday, particularly as it followed on very nicely from my training in the last few sessions, where I was talking about looking at the 15-minute charts and using the obvious swing pivots on the charts. And quite frankly, yesterday was about as clear and clean and good as it gets. So a very good day for MTPredictor customers, and as such, to come away shorting pretty much the high of the day and taking profit pretty much the low of the day is the best any day trader could want. And there it is, all done for you in MTPredictor.